Good morning, everybody. It's the 8th of March. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. He's a bit late this morning. He was unwinding his nickel position, but he's with us now. Look at the smile on his face.
Yeah, I wish, mate. I wish.
Yeah, crazy moves.
Yeah, quite mental. We'll have a little look at that on the charts in a sec.
Okay, let's get through the headlines then. Obviously, continued headlines from Ukraine. Very much focusing on the humanitarian effort. The main focus has been to allow safe passage of civilians attempting to flee from the conflict areas, but little progress so far has been made, especially with many potential exit routes heading for Russia. The next round of peace talks are expected to take place today, with Russia demanding that Ukraine will guarantee that it will not join the EU or NATO. Western countries continue to supply aid and military hardware to Ukraine, but also ruled out any move to impose a no-fly zone. Oil yesterday held near 13-year highs. It briefly dipped during Monday's session as the EU ruled out any immediate ban on Russian oil and gas supplies. The US did indicate that it was prepared to act alone in banning Russian oil, and underlying support for crude remained strong as a result. Global equity markets continued to slide yesterday. Wall Street equities weakened further on Monday, with the S&P 500 closing close to 3% lower on the day, and a steep decline in Nasdaq index, which pushed the tech sector into an official bear market. So that's 20% lower from the highs. There are also concerns over the impact of higher energy costs, and also unease over the impact of the sanctions on Russia. The Swiss National Bank has made an intervention warning. It commented on Monday that with a warning that it would engage in currency markets to curb franc gains, although it noted it would concentrate on the overall currency situation rather than specific currency pairs. Those that have been in the market for a number of years will be familiar with a couple of probably painful Swiss interventions in the past. So while that's on the table, you may want to be careful about holding anything linked to the Swiss franc. We also saw commodity currencies tumble yesterday. There was strong demand for commodity currencies, with particular focus on the Aussie and the New Zealand dollars. But we saw some really sharp reversals yesterday, which again we will show on the chart because they have made quite an impressive print. So we'll get onto those shortly. Steve, I'm going to hand over to you first of all. Where would you like to kick off your analysis this morning?
Well, I'll start with oil as it's in the news and the headlines you just talked about. Russia having, or countries banning Russian imports. Now, it's easy for the US to say they only import 8% of their oil that comes from Russia. They can quite easily sort of do without 8%. There's a lot of countries out there that rely heavily on Russian oil, so it's a lot easier for the Americans to do, to show that it looks like they're doing the right thing, but it's not as easy for other countries who heavily rely on Russian oil. It's not, yeah. I love it when these countries look like they're being the saviors or whatever, and it's
Virtue signaling, is that what it's called?
yeah, exactly. That an easy thing for them to do. Anyway, that's my little orange box out the way. Let's take a look at the markets and how, really, from a technical perspective. I'll look at WTI crude oil first, just on a short-term chart. We saw the big spike higher, the gap higher. We talked about this yesterday, and these gaps tend to get filled, which we talked about yesterday as well. And it actually came down and filled it really nicely, filled the gap. So the weekly gap, daily gap, hourly gap is all filled. That's really nice. And now that allows the from a technical perspective, the oil to carry on higher. I can't really see much in the way of this changing unless we get some real big turnaround. Now, on a daily basis, however, that is a little bit of a concern. So we really need to make progress to the upside quite quickly. This is like a hanging man type candle, bearish candle at the top of the market. So if we don't get the high taken out, or a close above yesterday's open very quickly, I'd say in the next day or so, then there's a good chance of this reversing. Brent crude oil, similar sort of thing. Natural gas, shooting star formation around the long-term trend line. This trend line goes back to October 21. Well, two parts of October 21, the 2 days, the start and the end of it. And also it sort of like coincides with the February high this year. The shooting star candle broke the resistance and closed back below it. So maybe a little bit of reprieve there for natural gas. Again, you'd like to see confirmation today with a negative day, especially if we can get down below like 465. That would be negative for natural gas on a more short-term basis. Oil continues to push higher, nothing stopping that. We've got the measured move target of our double bottom formation, which we highlighted yesterday. That comes in at 2150, not far away. The all-time high 2075. Again, that's only well, $65 away currently. We have been a little bit higher this morning. We've been up to 2021. That's the yearly high now. So yeah, to really sort of targeting the all-time highs. I can't really see it not getting there now. Other commodities, obviously the metals have been affected. Silver's been dragged up. It's not really got the same sort of motive in it. But nickel, really, the market really that I want to obviously this chart's not great. It hasn't got a lot of information on here for whatever reason. It's maybe I can pick up a different nickel chart. Maybe the futures chart might give us some information. I suppose it depends. Yeah, look at this one, weekly chart. This goes back to 2015, so it's a little bit more information here. Very difficult to trade nickel on the normal platforms, but you can see what's happened in the last couple of weeks. We've seen this squeeze higher, and this is basically Russia's one of the biggest nickel producing nations, and the futures market has had a waft of a short position as well. It's a China-based one. It's a China bank has had a large margin call. The LME have stated that they're giving them more time to pay. So this large margin call would have been a result of the price action probably from last week, and specifically from Monday, where the price jumped. There's a big gap open here, we can see. Now it shows a high of $6,000. So, but the spot markets or the CFD markets have traded up to $100,000 overnight, and they're back. I think they're closed around about $80,000. This market is obviously closed at the moment. It's the futures market, but yeah. So that's I mean, from yesterday, that's a horrendous position for both the LME and the Chinese bank, whoever they're representing, to be in. So that'll have more spillover. It could spill over into the other precious metals. So don't throw your Coke can away. Start to recycle it. Taking a look at cryptocurrencies, Bitcoin still under pressure. This weekly chart just highlighting the fact that we did get up to this previous support, now turned into resistance, which has acted as really good resistance now on 3 weekly occasions. And so for me, this is a really big resistance level, 45,500. That's the one to watch for the future if we ever get back up there. Obviously, I'm not saying we're reversing, but the correction lower has been pretty aggressive. So this leads me to believe that the indice markets are very heavily linked to Bitcoin in the same sort of risk on, risk off approach. So yeah, under pressure along with the indice markets, and really relying on them for them to turn around. But that doesn't seem to be any sign of that now. Oh, FTSE, I didn't get stopped out. Lovely. That looks all right, I don't think. Anyway, we'll see that in gun to head. But on the daily chart in FTSE, we had this big spike lower. Obviously, there's a lot of influence of commodity markets in the FTSE and commodity companies. So in some respects, that's doing quite well compared to other indices, which maybe don't have that same sort of composition. But today we've seen a pretty decent start in the FTSE, and resistance coming in around about the 70.35 area, support coming in at 68.55, and yesterday's low 67.65. So really looking out for them sort of levels in the FTSE. The DAX has been really under pressure, but it is like really fighting back this morning. Again, you can see the sort of like we're looking to form a bit of a bearish engulfing day to day if we can continue higher. 12,954 we're trading at the moment. So a close above here would be a reversal of yesterday's candle, and that could potentially set up a little bit more of a potential up move later in the week. Shooting star, sorry, bullish hammer being posted currently on the Dow. So again, a little bit of good news there. Still got a long way to go to reverse yesterday's sell-off, 33,250. So we've got about 400 points on the upside really to cover that. Also, Nasdaq was under pressure, and we've off to a good start, off to the races this morning. We saw just short of previous swing low at 13,035, got down to 13,100, just above there, and rebounded higher. So a bit of a bullish hammer forming here as well. So really important day. Tuesday turnaround, do they call it? I think we used
Turnaround
to call it
Tuesday.
Turnaround Tuesday on the floor. We used to call it whatever the market was doing. Tuesday always used to sort of head fake you. S&Ps again, similar type of price action. It's bounced from 41, 44, and is above yesterday's closing price. So looking okay there. The China 50, obviously for me, we've broken down below the 14,500 level. That's very, very negative indeed. We're at 900 points away from sort of even retesting that. So for me, there's plenty of room for a correction, but you will see these indices running into decent resistance and more sellers, even if they get a decent correction. I've covered it. I think that's it.
You have done a very good job there, Steve. Thank you very much. So let's look at FX. Some interesting things going on yesterday. So this is the dollar index. We are stalling a little bit at the upper end of this bullish channel. Really strong move higher yesterday. Still seems to be continued strong appetite for the US dollar, and it's edging closer towards that $100 mark, which is our sort of first target on the upside, really. But the real story was playing out in some of the commodity markets, because they've had some pretty exceptional moves to the upside. This is Aussie Cad. As you can see, we broke out of this downtrend and moved quite substantially higher, but yesterday posted quite a strong reversal. So we moved all the way up to 94.63 before reversing that, and now we're backing that up with further losses today. The interesting one for me and the Aussie was against the US dollar, actually. It's rallied into downtrend resistance, but also a 78.6% fib level. And yesterday what we posted was a bearish outside day candle. So we made new highs up at these levels at 74.42, but we closed negative on the session around 73.14, and we're seeing further declines on that today. So that is an indication for me that we might be ready to resume the overall trend lower in this, and that maybe commodity prices in that sense have maybe peaked in the short term. Certainly nickel hasn't, but maybe some of the others have. So that may be something to keep an eye out for. If we look at Euro versus Oz, this was a bit of a horror show, really. It was 14 consecutive down days that we saw on this pair, including yesterday. So I guess it was only 13. I'll get rid of that now because we've ended that succession of lower closes. But yesterday we saw a really big reversal on this as well, down to lows at 145.64. Very sharp reversal to post this hammer looking candle, and backing it up today with some further gains, up by over 1% on this at the minute. So this is the leading currency performer at the moment. I think any gains are likely to be capped into this region here. So we've got previous lows from the 25th of Feb last year, and these lows here from October last year. So a rally into this kind of zone, I think, would be a reasonable retest of these levels and maybe encourage the short sellers back in. But for now, it looks like we may get a bit of a squeeze on some of these currencies, where some of these short positions need to be offloaded pretty quickly, because obviously they've had great success on this move lower. Looking at some of the other currencies, we can see a bit of a bounce back in Euro versus CAD. Sharp reversal there yesterday, backing that up again with further gains, but we've got resistance above at 141.00. Looking at Euro Sterling, that posted a decent reversal yesterday, not quite a bullish outside day, but decent nonetheless. These are the lowest prices that we've seen since 2019, and prior to that we have to go all the way back to 2016 for the prices that we've just seen in recent days on that. If we take a look at euro versus the US dollar, that didn't do an awful lot yesterday. It actually still closed lower on the session, so there was no turnaround in this. So still further weakness in the euro and obviously decent strength in the US dollar. We have seen it find some support at this 88.6% Fibonacci level, which is kind of, you know, the last chance saloon if this fib levels are going to have any impact. Looking at the price action today, we're still inside yesterday's candle, so we may see continued selling here, but overall it still looks pretty weak. If we look at cable, we can see that that broke down yesterday below key support at 131.60 to post the lowest prices that we've seen since November 2020. So the break below that support level for me lines up a continuation lower towards this 50% fib level at 128.46, and that level is relevant because if we look at the longer term picture, we can see the lows that we posted at the height of the pandemic to the highs that we posted around May last year, and that blue line represents 50% of that entire move. So that would be a natural level to target on the downside, I think. Just quickly flick through some of these New Zealand dollar currencies because obviously they've moved higher quite substantially on the back of the move higher in commodities, but as we can see, maybe a bit of stalling on some of these yesterday. Certainly, you know, we saw higher prices printed, but they all seem to close positive on the session, with the exception of New Zealand dollar versus the Japanese yen. That really is quite a bearish candle there. Big move to the upside, broke above this previous support here from January, previous resistance, from January around 79.15, and closed back below it with a shooting star type candle. New Zealand dollar, US dollar is on the back foot today. That rallied into resistance at 68.60, and that continues to cap the upside. So that looks to be a decent level to have maybe initiated shorts, or having waited for the confirmation, maybe fresh shorts could be initiated there. Dollar CAD was looking quite interesting. Seemed to have bounced from trend support on the daily chart, and I was looking at this on the intraday chart, and it looked as though it may have formed a bit of an inverse head and shoulders, an upward sloping one as well. That was one of the ideas I was looking at last week, which would have worked out pretty nicely. But this may be a candidate for the gun to the head trade today. I was looking at this as an inverse head and shoulders, upward sloping. It looks like it's trying to break up through the neckline now, although I prefer horizontal levels, so I'd say that's already done it, and maybe looking for higher prices on that. That's it from me.
Nice one, Joe.
Okay, so the gun to the head trades yesterday, Steve, as you quite rightly saw, you were not stopped out in the FTSE 100. You made 44 ticks, or 0.44 R on that yesterday. So well done. I was stopped out on euro sterling, obviously a big move higher from euro versus the pound yesterday, which meant that didn't work out. So Steve, what are you fancying today? Anything catching your eye?
There's a couple. I'm actually thinking about buying indices without even thinking about the fact that I never buy indices. So this might be a half decent one. Double bottom potential formation. If we can break above 13,147, it just feels like indices could have a bit of a grab back day. It's either that or the FX you're talking about, Swiss, really. I was thinking about dollar Swiss.
You want to muck about with the Swiss National Bank?
Yeah, well, exactly.
You'll
Yeah,
have a dance for them, do you?
Yeah, don't mind that. They owe me. So, yeah, I don't know. It's that potentially, I suppose, the dollar. You know, that they're saying Swiss franc should be weaker, so buying dollar Swiss would make sense. Dollar's strong with what's going on in Ukraine, Russia situation, and Swiss National Bank are on the other side of it. So, I'm going to go with DAX because it's a bit more interesting for me. And yeah, I'm on an hourly chart, so I'll just get along here. Would obviously ideally would prefer to wait till we broke 30,150, and then the measured move target would be pretty decent on this. But I'm going to get involved now because I've got a gun to my head, so I can't not. Let's do 60 tick stop. Is that enough? Yeah, that's enough. And let's do a 10-to-1 risk reward. I like that, Joe.
10-to-1.
Yeah, 10-to-1. You can't get them. You can't get them sort of odds and channel them.
No, you can't.
10-to-1 risk reward. So obviously hugely volatile market. Only the stop is only like 40, 50 points away. It was 60 when I put the trade on. It's like now only 40 away, collapsing quite quickly. So grab them while they're hot.
Okay, good luck. I'm going to take a look at copper, I think. Yeah, copper. So just looking at some of these commodity currencies and the way that they've sort of reversed quite sharply. This is copper. So for me, it looks like it's been trading in a range. This is the daily chart. We tried to break out above the highs at 4.872, but we posted this pretty strong reversal candle yesterday. That is a bearish outside candle, or an engulfing type candle. And if we look at it on the intraday charts, what I can see here is that we've seen a break of trend. We've formed a little bit of a rounded top here. We've tried to rally back up, but we failed into this kind of level here, the previous sort of swing low before it collapsed, and then that's sent it lower again. And looking at the 10 period exponential moving average, you've seen a close below that. So for me, that looks like it's heading lower. So I'm going to sell it at 4.7901, and I'm going to target a move back down to these lows here in this sort of region. Can I make that stop tighter? Probably. Let's do it, shall we? Stop loss at 4.8655, looking for a 4.4R return on that one today.
Ooh, nice.
Let's see how it goes. Okay, 2 trades there then for you guys to have a look at if you're interested. Obviously, these are speculative. We are coming up with them pretty much on the off the cuff, and yeah, just bear that in mind if you are interested in following them. In terms of data today, there isn't a huge amount out. The only thing that we've got of high impact is the Reserve Bank of Australia Governor Lowe speaking at 22:15 UK time, so 10:15 tonight. So not much going on during the day. Probably just more chat about Ukraine and Russia, which of course is a very volatile situation and things can change pretty quickly, as we've seen. So do be careful if you're trading markets, as always, and make sure you're using appropriate risk management. Anything further to add, Steve?
No, all good, mate. Good luck
Cool.
with everyone out there.
Yes, indeed. Have a good day, everyone. We'll be back tomorrow morning.
Cheers.
Bye-bye.